Thank you for listening to the Real Estate Voice podcast. I'm Vernon R.E. Jones, managing broker, owner of Jones Homes. And for over 30 years, we have serviced the 7-county Denver metro area. Weekly trends. The median national home price for active listings grew to an all-time high, up to $447,000 in May, up 17.6% year over year. An acceleration from the annual rate of 14.2% in April. Notably, this price is 35.4% higher than May of 2020. Days on the market, median, 31 days. The lower days on the market indicates a tighter market. The pace of sales is quick, with half of homes spending less than 31 days in the market, faster than any other May in recent history, and a month less on the market than typical May 2017 to 2020 timing. Active listings up 8% year over year. Nationally, the inventory of homes actively for sale on a typical day in May increased 8% over the past year, the first time inventory has grown year over year since June of 2019. In the final week of May, active listings were up 11% on a year-over-year basis. More inventory means slower price growth. However, interest rates rising as they are slowing buyers coming into the market and shrinking the buyer pool. Let's look at what actually makes the real estate market move. We already know basic supply and demand. The more supply you have, less demand you'll have. Largely because you just won't have as many people buying at that point. Employment is a key driver of home buyer demand. In April, the economy picked up another 428,000 jobs, continuing toward pre-COVID levels. Unemployment held steady at 3.6%, still 1.2 percentage points above pre-pandemic levels, but moving in the right direction. Consumer Confidence Index. The CCI is a survey-based measure of how people are feeling about the economy and their financial prospects. It's down 2.2% month over month. In May, the CCI continued to drop from the recent seasonal peak in December of 2021. Mortgage rates, they are up 210 basis points year over year. Rate hanging around, fixed 30-year for good credit borrowers, 5.09%. And I believe around this time last year it was around 3%. Higher mortgage rates increase the cost of borrowing, making it more difficult for buyers to enter the market. The latest rates have held flat for a couple of weeks, sitting at, as I stated, 5.09%, up 210 basis points since June of 2021. I talk about the rising rates because it shrinks the buyer pool. Less buyers are able to buy. More homes coming onto the market. So supply is starting to increase. However, because supply was still at historic levels, the market still is hot for sellers and more difficult for buyers. But again, there is a shift that I've been talking about for months now, and it is taking hold. More properties coming on the market means more supply. However, higher interest rates will slow the home price growth. And I always tell people the best time to put a house on the market is between April and August, as most buyers with families do not like to move during school season. So that's why you find September to basically March, where you have significantly less buyers on the market. Pricing of homes the condition of the home, the location of the home, still matters. Doesn't matter what market you're in. Those keys are important to sellers continuing to get a high level of offers and a high price point. But, and I will say this, expect the days on market to start to increase. And I've also seen more houses being dropped from their initial listing price as they've been on the market longer than sellers had anticipated. I believe this is my 100th podcast. Thank you for all that have listened to them during the times that we've been doing these. It's for your real estate knowledge and help you better make a decision regarding your real estate endeavors. Thank you for listening to the Real Estate Voice Podcast. This is Vernon R.E. Jones. Any questions? Our number, 303-359-8218. As always, please be safe.